What's up, everybody? It's Jackson back again with another video. This is GNS Academy, and this video is going to be about fair value gaps, or also known as FVGs. This is a third video in a part of a educational series that's going to consist of a lot of videos. The first video was just a quick history, um, key terms, trying to answer as many entry level questions that you guys might have on day one. If I missed out on any, make sure to comment, make sure to message me on Instagram. Also, if you're in the Discord, just message me on the Discord. The second video was about dojis and engulfings, right? These are super common uh, candles that we will see all the time. So make sure to watch those two videos as well before getting to this one. This video is about fair value gaps, and it's going to be probably the second most important video behind the entry model, the AP model video. Okay, fair value gaps are literally our bread and butter. We use it every single day on all time frames. Okay, so if you can't identify fair value gaps, then you will not be able to use our model. You can still make money without them, if you do support and resistance, if you do supply and demand, if you do trend line trading, EMA trading. There's many ways to trade out there. But if you want to trade the way we trade, if you're in GNS Academy and you want to learn how I trade, fair value gaps are everything. Okay. Um, they tell us so much. A little bit about me. I have been a day trader for 4 years, but I've finally found profitability and been profitable and consistent for the last year and a half. I am funded at this time, at this moment of the recording. I'm funded with 6 companies, 4 with Top Step, and 2 with Alpha Futures. I've gotten multiple payouts all year, and I'm very grateful to be where I'm at. I'm really more proud though that I've been able to actually teach someone and trade with someone that was able to learn this information and grasp it, starting from not from square one. So everything that we're teaching you here is stuff that he knows. Okay, he has started in June of this year, 2025. It is December right now at the time of this recording. His first 4 months, he was able to get his first funded account and his first payout. It is, and 6 months later, he's able to have 5 funded accounts, and he's requested another payout for Christmas. So, what we want to do is be able to replicate that. The only reason why I feel comfortable teaching you guys this is because not only I can do it, but I was able to teach someone too. So, give yourself a pat on the back. This is very valuable information, like valuable information. This is not Netflix. This is not something that you just throw on in the background and do something. You need to watch this video twice. Okay. Pull out the pen and paper, actually write it down. I did it. Mondo did it. This is real life changing stuff here. Don't take it for granted. Pull out the pen and paper, watch this video multiple times. And I'm gonna attach, 2 videos in the Discord that are in relation to this, so you can have a different perspective of what fair value gaps are. But without further ado, let's get into it. So let's try to define a fair value gap, okay? Simple definition, what they look like are gaps between candles showing an imbalance, okay? Now, what it also means is that price has an area on the chart. We're going to see the charts going up and down, dojis and engulfings, right? Um, fair value gaps are going to tell us in the charts between the dojis and engulfings where is the best value, the fairest value. It's called fair value gaps for a reason because it means this is where the best value is on gold to buy or sell gold. This is the best value to buy Bitcoin or sell Bitcoin. Why? Well, it's telling us something. It's the gap is telling us something. The imbalance is telling us something. Um, and it also shows power and strength towards a direction, but also acts as a magnet. What do we talk about in the last PowerPoint? Dojis are indecision, and engulfings are decision. Okay, when we have a fair value gap, it's also showing decision, right? But it's also acting as a magnet. So engulfings are just decisions, but we don't think of them as a magnet. Fair value gaps, we think of them as a magnet because why? It's fair value, it's the best value. So the candles should come back to that area eventually and react off of it because it's the best value. We'll get into more on that right now. First, we're going to talk about the anatomy of a fair value gap. Okay. So, the anatomy of a fair value gap. It consists of 3 candles, okay? We know what a doji is, we know what an engulfing is. We talked about what a doji and engulfing mean together when we see them versus whether it's a bullish or bearish. Now let's try to put 3 candles together, okay? It doesn't matter what 3. We just need 3 candles together. The middle one preferably is most likely going to be an engulfing, but you'll see what I mean. Is going to be a doji engulfing doji. It could be a doji engulfing engulfing. It could be engulfing doji. The middle candle is most likely going to be an engulfing. It doesn't matter about the other 2 candles. It doesn't matter about the candles after that or the candles before that. It's these 3 candles that we're going to find, and they're going to look like this: a doji engulfing a doji. This is not really a doji, but you know, it's a regular candle engulfing and a doji. Now look at the wicks. We talked about the bodies on the last PowerPoint. That's a body, and then a wick, right? Like a candles have wicks, right? They're the lines. Now look how far they are away from each other. Look at the middle candle. Look how far they are away from each other. I call them kind of naked. It's a naked candle. Look how far they are. This is far, that's far, leaving the whole side of it naked, unprotected. There's no wicks or a whole candle kind of sandwiching it, so it leaves a void or a gap. It's naked. Okay, same thing here. Doji engulfing doji. Doesn't matter really the candles. What matters is what it looks like. Sear this into your brain, right? It's gonna be a wick and a wick, but they're far from each other, creating a gap. Okay. What's important is that the middle candle has no wicks in front of it or behind it. This would be in front and that would be behind, right? This is the candle, 1, 2, 3, 4, 5, 6. So this will be in front of the middle candle. And this will be behind the middle candle. Look how there's no wicks. Look how there's no wicks. Same here. So we have this other picture over here. We have a doji engulfing doji. Great. You could identify them, right? What's important is that now we're looking at the wicks and how far they are away from each other. If they're really far like this, 1 and 2, like or 1 and 3, far, it creates the gap. It's naked. Okay? Look at this. You know what a regular candle is. You know what an engulfing means, and you know what this means. So, or this is a regular candle, right? So you see the engulfing. Okay, decision was made. Good. You know that already. A decision was made. But look how there's no gap. Fine, you could say that a decision was made to go up, and then this candle comes down, but it's still overall going to keep on going up, right? But in this case, what we have is a doji indecision, boom, red candle, red, more than red candle, a red engulfing decision. You have a doji creating a gap. Okay, so now we're just trying to get a little bit further without going too crazy. You know what a doji is, you know what an engulfing is. Now watch 3 candles make something, make a gap. Okay, before we even go on and explain what it means, we need to continue searing this into our brain. Okay, let's go look at Bitcoin. This is Bitcoin. Okay, now let me move myself out the way here. Okay, so we're looking at Bitcoin. Okay, we have, what is this? Bearish engulfing, doji, doji, bullish engulfing. You know these stuff already. You know what this stuff is. Now let's try to make and identify fair value gaps. Okay, I'll help you right here, and then after I help you, you're gonna pause and look for yourself and try to identify them yourself. Okay, So look, what do we have here? The obvious one, right? This doji, engulfing, and then a regular candle. Look how they're all the same color. They're all green candles. It doesn't have to be a red, green, red. It doesn't have to be a doji, engulfing, doji. Just look at where the gap is between here and here. You see the distance? Look at the distance between there and there. That's the same thing as what we talked about here. The distance between there and there, right? There's a huge distance. There's a gap, a literal gap. Okay. They could be identified by drawing a box from, let's say, from here to there. That's really important. Look what happens when price goes to it. It starts reacting to it. Okay. That's why we need to know where they are, what they look like. We're going to spend like 5 minutes here trying to identify some more. Okay. So we have one right here. Right? Obvious. Obvious. Now, what else do we have? An obvious one. Let's stick with the green ones. Look. What is this? Doji. We like dojis. Okay. That was actually very ugly. Doji, right? And then what do we have here? Engulfing. And what do you have here? Regular candle. Okay. We know based off of the first class, right? Or the second class, I should say. Doji, indecision, engulfing, decision, right? We talked about that. Doji and engulfing, decision. Let's make 3 candles though. Doji, engulfing, regular. Where are the wicks at? Far away from each other. From this one to there, look at the distance. And it creates a void. Okay? Like what did I say also? Who cares about these candles going on over here? There's a bunch. The doji. That's good. Indecision. Boom, decision. You have to be able to identify the fair value gap by 3 candles. There's gonna be a bunch of candles everywhere. Look for the 3 that make a fair value gap. Okay. Let's go over a couple more. Not every fair value gap looks the same. Sorry, I have to do all this stuff. Okay. Okay, not every fair value gap looks the same. I know you're looking at this one, right? So let's just get it out the way. This is a giant one, right? What do we have? You can call it an engulfing, right? This is a small engulfing. Then you have a big engulfing, and then you have a doji. Once again, it doesn't matter about the sequence that it has to be. Just look for the gap and identify it. Why is that a gap? Is it because we have an engulfing doji? No. It's because look at the wicks. Here's a wick here, barely a wick. And look at there's barely a wick on those, okay? We barely even have a wick. Boom, boom. So what is there? A distance. Boom. That huge distance makes a fair value gap. Let's just remove the zones and you can see wick to wick, okay? But what do we have right on top of that? Another fair value gap. Wick to wick. And then that wick right there, boom, to that wick. So essentially, we have 2 fair value gaps lined up on top of each other. Okay, we have this fair value gap from that wick to that wick. Look at the gap. And then we have that wick to that wick. Look at the gap. Those are 2 gaps. They're both completely different, but those are gaps. Equally important. Why? You have a doji. Boom. What the hell? A doji. Bang. And then you have an engulfing. And then you have another engulfing. I will repeat this again. It does not matter the sequence of the 3 candles. Just find the 3 candles that make the fair value gap. Okay? Those are fair value gaps. So let's find 3 candles out of 100 candles. Let's find 3 candles that make a fair value gap. Okay? One more thing. They don't have to be big. Look at this little baby one. We call these slivers, right? A sliver fair value gap. See how it's still a fair value gap? What do we have? A doji, engulfing, and then a sort of doji. What's important is look at the distance between the wicks. Bam, bam. See how there's a distance? See how they're not overlapping? Okay. So what is not a fair value gap then? Well, something like maybe something like this. Remember how I said they both need to be naked on both sides? Look at this side. Bam, it's naked. But look at this side. Is not naked. Is completely, the wick is completely covering this other side. There is no void. There is no distance between the wicks. Look at the distance between this wick, bam, and that wick, bam. That's not a fair value gap. There's no gap. There's no distance. There's no void. There's no zone you could draw because they're overlapping. Sure, one side is naked and the other side is not. It doesn't have to look like this. It doesn't have to have two wicks going across like that. Like this. See, we have a wick going up here and a wick coming down here. They're overlapping. There's no gap. Sure, it'll be a lot like, that's one of them too. Like that could not be a fair value gap, but this is also equally not a fair value gap. Same thing here. Just because one side is naked and the other isn't doesn't make it a fair value gap. Look at this right here. Hopefully you guys, your eyes were already gravitating to this. Why? Because bam, bam. Both sides of the candle are naked. Both sides of the candle do not have a wick. Both wicks are not overlapping. There's a distance, there's a void, there's a gap, a fair value gap. Okay? But if you're really paying attention to, you should notice the sliver. Fair value gap right there. Both equally important, and we draw each one on every time frame. Okay? Boom. Why? There's a gap here and a gap here. Bam. Look at the distance. Look at the what consists of it. A doji engulfing and a doji, three green ones. Doesn't matter if they're both green, yellow, pink, purple, whatever. Find the gaps. Find the gaps. They're important. Okay? Now you do it really quick. There's a bunch of gaps here. Right here, there's a bunch of gaps, okay? Pause the video for a second and identify three gaps real quick. Pause it, identify three gaps, okay? Bam, you paused it. Okay. Now you unpause the video. I'm going to draw just a couple. Bam. 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 Okay. There's some up here. Bam. There are gaps everywhere. Okay. Bam. Did I miss any? You guys tell me. Maybe I did. I think those are all of them right there. This is almost, but you can see they touch. Oh, right there. The little baby one. Bam. Those should be all the fair value gaps on the screen. Okay. Practice this. Keep on looking for them. This whole presentation is going to be about them. Okay. But let's go ahead and move on. That's identifying them. Now, what do they mean? Okay. So, what does a fair value gap mean, guys? Sorry. I'm trying to move my face here. So, what does a fair value gap mean? Looking at it face value, price moves so fast that people were not able to participate in that move. So if price or the candles decide to come back to the fair value gap, that might make it the best fair value to enter or exit the market. They also act as magnets for price to return to, since the area where a gap is created is literally fair value. One thing I didn't talk about in the previous presentation about dojis and engulfings is what the candles mean on the chart and how it's also telling us something. Okay, this whole educational series is not only how to trade, right, but it's how to decipher the code to understand Japanese candlesticks and learning the language. Okay, so before we continue, you know what a doji is, right? Boom, four dojis. You know what that is. You know what an engulfing is. Bang, 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 bang. Okay, but let's talk about really quick. This should be super simple to grasp. I was able to explain this to Jasmine, my girlfriend, and you guys should be able to understand this, okay? There's a x-axis and a y-axis. The y-axis over here to the right is the price. So if we look at gold, it's the price of gold. If we look at oil, it's the price of oil per barrel. If we look at Bitcoin, this is the price of Bitcoin. Okay. On the bottom is going to be the time, but it depends on what time you pick. We have the weekly time frame. So you can see the weekly time frame. Each candle now represents a wick. There's still dojis. That's still a doji. That's still engulfing. That's still a big doji. That's still this, whatever. Engulfing, engulfing, engulfing. You should be able to identify these still. Engulfing, doji, engulfing. Same thing, just a different time frame. Each candle represents a week. That's the June on the bottom you can see here. Monday, June 23rd, 2025 to the 30th. The 30th to the 7th to the 14th, 21, 28. Okay. Each candle represents a week. Now you can go here on the top and it has D for day. Each candle represents a day. 4 hour, each candle represents 4 hour. 1 minute, each candle represents 1 minute. It's kind of looking kind of weird, huh? On the 1 minute time frame. But look, if I just showed you this chart right here, would you know if it's the difference between a 1 minute and a weekly? Probably not. That's why you have to look here and select it. Each candle represents a minute. This is at, let's try to give you guys whatever. Um, so each candle represents 1 minute. Okay. Right now we're recording this at midnight. So, this is the 12:38 candle. Okay. This is the daily candles. Now, based off of that, right? Each candle could tell you something. What is this? A doji. Very good. What is this? An engulfing. Okay. We know that. But now the candle could tell you, based off of the y-axis and x-axis, it could tell you something. Okay. This is the body, and that's the wick, right? We talked about that. The body and the wick. Okay. So what do we have here? On Saturday, December 13th, price was at Bitcoin was at 90,265. Okay. X and Y axis. We're pinpointing it right here. Bam. We're playing Battleship. Okay. But what does the candle mean? That it started here, it went up and down and closed. Where did it go up to? The wick will tell us. It went up here to 90,619, came down to 89,768, and then close and finish at 90,200 again. Okay. How do I know it started here and finished? Well, wherever one candle finishes, the next candle starts. Then it started here, came up, came down, finished. Okay, this is where it finished. And then what did it do here? It started here, came up, and then it came down, and then it finished. Okay, now then wherever the last candle finished is where the next candle starts. This candle started here, came down, came up, and finished. That's why it looks green, because it started from here and it finished above. A green candle will start like a green candle will start like that. Every candle is going to start like that. Okay. But a green candle will go up like that and finish green because it's going up. A red candle will go down and finish down because it's a red candle going down. So it's about the finish of the candle. They're all going to start the same, but it's where it finishes is how a candle's created. Okay. So that's the anatomy also of a candle. I need to tell you guys this so you guys know why a fair value gap is important, okay? and I didn't think about this until after when I made this PowerPoint. I was like, man, I didn't even tell these guys what like the candle means on the graph. Okay, I know you guys know what it means definition wise, indecision, but what does it mean on a graph? Okay, this the same logic right here. What did it do? This candle came and closed as an engulfing. It closed right here at 90,243. Boom. The next day starts right here. 12/13/2025 starts right here. What does it do? Wakes up, down. This is the open. This is the high of the candle. This is the low of the candle, and then it closes here. Look at this candle. This is the open of the candle. This is the high of the candle. That's the low of the candle, and it closes here. This is giving us valuable information. On 12/12/2025, the candle on Bitcoin, it started at 92,522. You can see on the right side. So now we're reading, right? We're reading the graph. We're reading the charts. Started here at the high of that day of 12/12. It went all the way to, by the wick, it'll tell you how high it went. 92,755. At the during the day, sometime during the day, it went all the way down to 89,000. So it went from 92 to 89 that day. And then it finished at the end of the day at 90 260. Okay. This is what happened in that day. This is why it's important. You could be able to read the charts. Is one thing. Here's a chart of Bitcoin. Tell me what the dojis are. Tell me what the engulfings are. Tell me where the fair value gaps are. Okay. Well, look, there's a fair value gap right here on the daily time frame. All right. You guys know what that looks like. But now let me give you a chart, and then now I need you to understand um, where price is at, what happened in that day, what day was it? Okay. So if I ask you what happened on 12/12/2025, okay, the candle started up here at 92,005, went up to 92,007, went down to 89.5, 89.4, and closed at 90,002. Okay. That is how we're reading the chart. That is what the engulfing candle did. Also, it's an engulfing candle. You can see a decision was made. That price went from 92,000, or the candle went from 92,000 at the beginning and closed at 90. So the Bitcoin lost $2,000 of value. But what's important is that it's an engulfing. A decision was made that price was going to sell. Prices are going to go down. Is that kind of making sense now? We're building the pieces. An engulfing is a decision being made. Okay, we know that. So if we see that this is a decision being made to sell, but you could literally see here it went from 92,000 to 90 in one day. Bam, that's the decision to sell. When we see that in a red engulfing candle on the daily time frame, we should probably sell our Bitcoin and wait for it to get to a better price to buy again, a lower price to buy again, right? What do we have here? The day after 12/13, a doji indecision was made. Okay, but what happened? It started at 92 at 90,002. The highest of the day on that day was 90,006. The lowest was 89.8, and it finished at 90,002. This is a doji, means indecision. You can see because it didn't go anywhere. That whole day it went up and down and closed. It wasn't like it went from 92 to freaking 90 and lost 2,000. It literally stayed at the same price throughout the day. It opened here, high, low, close. Same. That's a doji. 12/13. If I ask you what happened on 12/13, it really didn't do anything. It started at 92, went up to 96, went down to 89.7, and then finished back at 92 again. That's a doji. What happened the third day? Engulfing. Bam. Right? A decision was made to sell. Good. Right? You know that. But now let's read some more. It came off from here. It ended at 92. The next day it starts at 92. Where did it go? The high at 94, and then it came all the way down to 87.5, closed at 88.1. That's how you should be able to tell me what happened on that day. Okay. How does this play into a fair value gap? We could also use one green candle example too. I'd ask you what happened on 12/2/2025 on that Tuesday. Okay. Well, this candle open. You can see they go off of each other. This was the close of that candle. Then this is the open. Open. This is the close. So this is the open. Open. That's the close. This is the open. Open. Close. Next. Open. Close. It's like connecting the dots. Okay. Bam. Open. Close. Open. Close. Open. Close. Open. Close. Open. Close. Okay. We're connecting the dots. Now, let's do the same example but for a green candle real quick and we'll move on. What happened on 12/2/2025 Tuesday? Well, Price opened at 86.2, right? The wick was at 86.1, so that was the low of the day, and it shot up. It had a huge green engulfing candle. What the highest of the day was at 92.3, and then it closed at 91.2. So the candle started at 86 and went all the way to 91, a pretty much a $5,000 increase on Bitcoin, of the value of Bitcoin, okay, in one day. Engulfing candle, a decision was made to buy. But by proof, you could see 86 to 91. You could tell by the price over here. Okay. What was the high of the day? 92.3. What was the low of the day? We have it 86.1. Okay. What did the candle open at? 86.3. What did the candle close at? 91.2. Okay. We should be able to tell like this little stuff. And this is going to be important because what does a fair value gap mean? A fair value gap means that price on the candlestick, moves so fast that people weren't able to participate in that move for that day or for those 4 hours or for the 1 hour, whatever the time frame the fair value gap is. Price moves so fast that people weren't able to participate in it. So if price does come back to it, it is the best fair value to get into the trade or get into the market or leave the market. They act as magnets. When we see in a doji and engulfing, good. We understand that a decision was made. Price opened here, closed here, engulfing. When a fair value gap is created with 3 candles, doesn't matter what 3, when a fair value gap is created, now it's acting as a magnet for the candles to come back to. So we could have a doji by itself, engulfing by itself. Then we have an doji and engulfing, it tells you something. Now when we have a fair value gap created by those candles, now price is acting as a magnet. This is all important because it's one thing to know a doji's indecision, is one thing to know that engulfing means decision. Doji means indecision, engulfing means decision, is one thing to know. Is one thing to know when they're together. A doji means indecision, engulfing means decision. So a decision was made after it was indecision, put them together. Now it's another thing to be able to put 3 candles together and then have a magnet, because just a doji and engulfing by itself, it's just there's information, but it's still not enough. So a fair value gap gives us a magnet. It's important to have them on there, because if you knew like where price could go to, then wouldn't that help you out so much? That's what a fair value gap is. Okay, price might come back to here, the candles might come back to here. We can use that literally to our advantage. Okay, now we know what they look like. What does it mean? Let's use practical example. If milk was $1 a gallon and then jumps to $4 a gallon in one day, then everybody will miss out. Okay. Let's say you needed to go to the grocery store tomorrow. Okay, you see that milk's $1 a gallon, and then you go to the grocery store tomorrow and it's $4 a gallon. You could buy it at $4 a gallon, or you could wait a day or 2 or 3 to see if it comes back down and get it at the fair value, the best value. So let's say you go to the grocery store, is at $4 a gallon. Okay, dang. Well, I'm gonna wait 2 more days. I go back 2 more days, it's $3. I wait another day, it's $2. I wait 1 more day again, it's back to $1. That's the fair value. That's the best value. Okay, that could be seen on the charts. On the contrary, let's see if let's say Bitcoin was valued at $100,000 a Bitcoin. The next morning, it drops to 90,000. We missed out on that. We didn't get to sell it. Let's say we go to sleep, whatever, and then boom, we wake up, it's at 90,000. Dang it. I should have sold my freaking Bitcoin. Like, okay, am I just going to sell it right now at 90 or wait for it to come back up? Let's say it drops down to 80. Freak. Like, what am I going to do? Should I sell my Bitcoin now? No, let me wait till it gets higher so I can sell my Bitcoin. But now let's say the next 2-3 days, it shoots back up to 94. You had it at 100 and is now at 94. Sell your Bitcoin. That's the best value. This is practical, logical stuff. Use it for Apple. Let's say Apple's at $20 or $200 a share. You have your Apple, you have a bunch of shares, and it's at $200 and you have a lot of money. And then it drops from 200 to 100. You're like, oh my goodness. Well, let me wait for it to get back up in value so that I could sell it at the highest I can so I can make the most money back. Instead of selling at $100, all your shares, $100 a share, you could wait for it to get to 150, 160 at fair value. This is what the candles mean. Let's go back to Bitcoin. Let's look on the daily time frame. And let's find a good fair value gap, for example. Okay. So we have a bunch of fair value gaps here, but I want to give the cleanest one for you guys. Okay, so we'll use this. So what do we have here? A big fair value gap. Okay. Why? Look at 3 candles. 1, 2, 3. Okay, look at the distance between here and here. Bang, bang. Okay, look at the wick here. Bam, bam. Is naked, okay? You get it. That's a fair value gap. Now, let's draw it across. What happens when price gets to it? It respects it, okay? It goes to it, bang, it bounces off, it goes to it, bang. That's why they're important, because we have to draw them so that they act as magnets, and then we can see what they do. Do they respect it? Do they make a doji and engulfing, a doji and engulfing? Okay, that's great. So, what does it mean? Let's say, this is why I had to explain the X and Y axis, because let's say Thursday, July 10th, 2025. Okay. What did the candle do? It started here and it closed way up here. And then the next candle, the next day, it didn't come back. That means that this whole price right here, at like, let's say it started here at 111 and it closed at 115, it went up $5,000, and then no one got to come back. The candle did not come down enough. Then no one was able to buy Bitcoin at 112, 13, 14, 15. No one was able to buy their Bitcoin there until it would close at 116. Okay, there's a void here, there's a gap. So let's say in practical situation, we're asleep. Boom, we have Bitcoin, and or we want to buy Bitcoin. We want to buy. Okay, tomorrow I got paid today. Tomorrow I'm gonna buy Bitcoin in the morning. We wake up, bang! It freaking flies up 5,000, 6,000, $6,000. Okay. Oh my goodness. Well, could I buy Bitcoin? Sure, but what maybe I should wait until we get a better value, a fair value. So what does it do? It goes up and down, taps it up and down, up and down. It comes all the way back down to 112. That's the best value to get it at. It was at 111 that morning. It shot up like crazy and it finished at 116. Do you want to buy it at 116 or do you want to buy it at 111, 112? What did it do? It got to 112 and it shot up. That's the importance of fair value gaps, because it tells you where the fair value is and they act as magnets. It went away and it came back as a magnet. Let's find one more really quick. That's a good fair value gap right there too. But if I can't find one here, then I'll find one on gold. Okay, so this is a good fair value gap here. We'll use this for sells. Okay, so the opposite version. So what do we have here? You can see here we have 2 fair value gaps here. You guys should know why. I should not have to explain it. 2 fair value gaps here. Okay, look at the candles. Yeah, they ran through this one, but then they go to this one. Bang. Okay, so what does it do? It immediately drops. But why? Okay, it's one thing to know where the fair value gaps are and what the price does, but let's explain it logically, because this is not just pattern trading. There's logic to it. Okay, there's logic. What do we have here? A doji engulfing, engulfing. Does it matter how the fair value gap is made? No. Do we know it's a fair value gap? Yes. Why? Look at the distance between this wick and this wick. Why? Look at the wick right here. Boom. Look at the wick right there. Boom. Why? It's naked. Look at that fair value gap. Look at that candle. Naked. Nothing next to it. That is a gap. Let's draw it out. Draw each one out. You have this one too. You can see what happens. Price touched it and then it went through it and came to this one and respected it and fell down. Engulfing. Made a decision. It made an engulfing here. Bam. Made an engulfing here. So it went through this fair value gap. Whatever. We'll talk about that. But what did it do? It tapped it with the wick and then made an engulfing and fell. Okay. Let's put this into English. Into English is one thing. Reading the patterns, reading the candlesticks, reading the fair value gap is okay. Great. What does it mean logically? You know the X and Y axis, what it means. We have on 11/3/2025, Monday, where did the candle open? At 110,500. Where did it close? At 106. So that day, Bitcoin dropped $4,000. Okay. Let's say we're asleep. And let's say we want to sell our Bitcoin, right? We're getting ready to sell. I want to sell my Bitcoin. It's at 110,000. I wake up in the morning and then bam, it drops down to 106. Oh my goodness. Okay. $4,000 difference. If you want, sure, sell your Bitcoin at 106, sure. But wouldn't you want to wait for it to get to like 107, 8, 9, maybe to sell your Bitcoin at the best fair value? Or do you want to just sell it at 106? Like, okay, what did it do next? Bang, the next candle opened right here at 106 and closed at 101. Your $10,000 difference. Oh my goodness, like, should I sell? Like, should I sell my Bitcoin? Like, is that 101? What if it just keeps on dropping? What if it drops to 90? Oh my gosh, like, I'm losing money. I need to sell my Bitcoin. And what does it do? It comes back up, touches this fair value gap, but most importantly, look at the price at 107. You were at 1010 and I was at 107. Isn't that a great price to sell your Bitcoin? 107, 8, 9, sell the Bitcoin around there. That's the best value. And what does it do? It drops. Okay. So this video is going to be pretty long already as it is. What we're going to have to do is turn this into part 2. Okay. There's going to be two videos here. This is what it looks like. Okay. We already showed many videos or many pictures of it. We look at them on a 4 hour and a 15 minute. So this is the daily, but what we like to do in our strategy is look at the 4 hour fair value gaps and the 15-minute fair value gap. Look at these fair value gaps, right? You have a big one here, bang. Okay. Big one here, bang. They're all important. Okay. 4 hour, we know the 4 hour fair value gaps and they're important too. In our strategy, we use the 4 hour and 15-minute. But next on the part 2 of this is going to be inversion fair value gaps. Okay. This is already a long video. We're going to make this part 1 of fair value gaps. Okay. A quick recap. It consists of 3 candles, right? Look at this picture here. What do you have here? A bunch of candles, right? A bunch of candles. You can tell me what that is. Regular candle, engulfing, regular, doji, engulfing. Okay. We know what the candles are. We know what they look like. We know what they mean. Now we have to try to paint a picture. You have a paintbrush, you have a canvas. You know that a coloring pencil does this, a freaking Sharpie does this. You know that a paintbrush does this. You know, a watercolor does this. Okay. But let's paint. Let's make some meaning behind it. Let's make a freaking Mona Lisa. You know, let's make a Picasso. Okay. So what does this look like? We have 3 candles and 3 bullish, 2 bearish. Okay, you know that stuff too. Great. What do we have here though? A naked candle with a fair value gap right here. Why? Because we have a candle wick here and a candle wick here. Okay, there's a distance, there's a gap. You can see here with the lines. Boom, boom. What happens here? Price comes and touches it and drops. Okay. So what do we have here? A doji and engulfing. A decision was made to go down, but where did it come from? A fair value gap. That's what's important. Okay. Let's put this in the logical real quick again. Bitcoin was at 100,000 and it drops down to 90. Okay. 100,000 up here drops down to 90. Dang, should I sell my Bitcoin? Like it dropped 10,000. Maybe let's just wait a day or two. Let's see if it comes back. What does it do? Come back up to like 96. Sell your Bitcoin. That's the best value you're going to get. That's a fair value. That's the best value you're going to get. Do it with anything. Let's say you have gold and you want to sell your gold and it goes from $4,000 an ounce to $3,000 an ounce. You could sell your gold at 3,000. You can wait for it to get to 37, 3,800 an ounce and then sell it again or sell it at the best value. It might not get to 4 again, so sell it at 38. Bitcoin, it goes from 100 to 90. It goes back to 94, 95. That might be your best value. Sell your Bitcoin. And then what does it do? Doji engulfing. Okay. That's why it's called a fair value gap, because it means fair value. That's the best value you're going to get. Okay. What it looks like is 3 candles and it has a naked gap. It's called a fair value gap. Okay. So part 1 of the series, part 2 is going to be inversion fair value gap. So same PowerPoint, just the second half of it. All right. Practice this. There's going to be videos attached to this. And I know there's a lot of information, guys, but this is the most important information. So give yourself a pat on the back. This is a long journey. If you already made it to this part of the video of the educational series, you're doing a great job. You're showing commitment. Um, and we'll go ahead and get back to the second half, and I'll make another video for it. See you guys.